Welcome back to our weekly Forex Forecast. In this episode, I'm going to start off by looking at the pairs that we were looking at the previous week, which was the last week of January. So in the last week of January, I actually took 3 trades, and these 3 trades were coming from these pairs. The first one was Euro USD, which I actually analyzed last week. Here is the trade that I actually took on Euro USD. So on Euro USD, it was something that gave a perfect pattern, which is an M pattern at this particular highs. We can see this being a very good M pattern, and we were actually looking for that presentation. So after having this pattern on H1 time frame, first leg, second leg, you can see the market actually dumped right to the downside. How did this come up? We actually had this from 3 levels to the upside, which is level 1, level 2, and then level 3, like in this scenario. So this was the first level. We had this as the second level, and then we had this one as the last level, like that. So this was actually a great trade. Then the second trade that I took was on CAD against JPY, which actually presented an M pattern as well as this. So this is CAD JPY, and the first thing that I did was to actually get a peak, and in this particular case we had this as a peak reset. So a peak reset comes after a completed cycle. This was a completed cycle. After a completed cycle, or a 3-day cycle being satisfied, the next thing is to find a continuation point in that same particular direction. So in this particular case, we had this as our peak reset, and from that peak reset, we can see that we had a very beautiful M pattern in that particular direction, which was clearly seen on the M15 time frame. And this is how it presented on the M15 time frame. It was actually a very beautiful pattern, first leg and then second leg. And in some cases, we can say this was actually a completed M pattern for us to get a drop like that. So these two were actually good runners. On Euro USD, it was 3 point something R in profit, and on this particular, it was around 2 R in profit. But unfortunately, the other trade ran right into my stop loss, which was Euro NZD. On Euro NZD, I actually deemed this as a peak reset, because you can see actually on higher time frame, like the H4 time frame, this is what we see. We can see 1, 2, and I was expecting this impulse to keep on going to the upside. But unfortunately on H1, this is what happened. So why am I talking all about this stuff that already happened? You can see that I'm trying to impart the knowledge behind my analysis, the knowledge on how I actually find these trades. However, you can see on my charts, it's all clear, no indicators, no EMAs, but those EMAs are very important as they remove the subjectivity, and that is what is taught in the top 1% traders course, which you can be part of and learn right away so that you understand how we get these entries with high precision. On that note, let's now jump on the pairs that we are looking at in this particular week. So the first trade, the first pair that I am going to look at in this week is going to be NZDCAD. NZDCAD is showing signs of keeping on going to the upside. So on the H4 time frame, which is the first time frame that I love to look at as the higher time frame, I can see that there was from this M pattern 1, 2, and 3. So there were 3 levels to the downside, and this becomes our point of reversal or a peak formation low. From that peak formation low, we can now tune to the H1 time frame to see what is taking place when the market is actually going to the upside. We can see these impulses being issued, this being the first one, and its consolidation. It was rise and consolidation for some days. If you are in the top 1% traders course, you understand how I can segregate this rise from this rise. Someone can come and say this is level 2, but that is wrong in the top 1% traders course rules. So this is level 2 up to this particular point. To remove that subjectivity, you need to understand the rules of marking these levels. So it's 1, 2, and then the last level is actually this one, which is the third one. From that point, we can see there was an M pattern that was presented. It's unfortunate that I couldn't enter it in the last week of January. Why? Because the M was presented on a Friday, and going into a new week, which is Monday, was actually this point. I was expecting at least to be given the third leg so that I can enter this short. But unfortunately, the market didn't do so, and that is still fine. So after that, we can see that the market gave this W pattern and went to the upside like that. So in this case, I can actually now deem this as a peak reset. This becomes a peak reset, and what I am now waiting for is to find possible buy setups. What are buy setups? These are W patterns, or the simplest trading entry patterns that we discuss in the top 1% traders course. So this is NZDCAD, which I am waiting to find buy setups to go to the upside. Will the market keep on going to the downside? Yes, that is correct. It can do so, and we do not have power over that. When it goes to the downside, it means we shift the war analysis. So what we are waiting for right now is a buy setup to go to the upside on NZDCAD. The other trade, the other pair that I'll be looking at this week will be USD against South African Rand, which I am expecting as well to go to the upside. You can see that on the daily time frame, we have two levels that have been issued. Level 1, pullback, and then level 2. These are clear from this W pattern from this particular bottom where we had 1, 2, and 3 to the downside. So what are we now expecting? I am expecting to see a move to the upside. But this move to the upside is being supported by the fact that there is this W pattern on the H4 time frame. You can see that at this particular point, if we go on the H4 time frame, we can see that there is a W pattern. A W pattern means it's a reset of the higher time frame, the daily time frame. So I'll be expecting to get buy setups on this particular pair, and those setups are taught in the top 1% traders course. But this is for the buyer sec. You can actually use any trading method that you intend to use. Some trade with ICT, some trade with SMC. It doesn't matter. What matters is the market. Where is the market going first? And if you know that the market is going to the upside, then you can actually incorporate the other trading strategies that you have under your belt. Then the last pair that I'm going to share with you, of course, I'll share much more and get much more during the week as the week progresses, as the market also unfolds. So this is Euro against CHF. Euro against CHF, I'm also expecting to see longs. I'm expecting to see the market go to the upside. Will I be wrong? Yes, I might be wrong. But what will govern me from taking a loser when I am wrong? It's now the pattern in the bias of the market. So if we look at this particular point, you can see that this was a consolidation after this rise. So from that consolidation, if we go to the H1 time frame, we can see that we had three levels to the upside, which are very clear. This was level 1 and its pullback, and we had this as level 2 and its consolidation, and we had this as level 3, like that. 3 levels in one particular direction, and the market went to the downside to create a possible reset. So will I enter at this reset? No, that will be extremely dangerous, because I always say at peak formations, market makers have room to do whatever that they want. So avoid to play at peak formations that are not as clear as 1, 2, 3. Always take peak formations when they are clear. A clear peak formation will be like the one that was presented on it was on US 100. US 100 actually created a very beautiful peak formation high, which is this one. We had a very beautiful M pattern after 3 levels of rise. So this one, we had level 1, level 2, level 3, first leg, and then second leg. And then the drop was actually issued. When you see a peak like this, after clear 3 levels to the upside, with the use of non-subjective method, non-subjective technique, or non-subjective concepts of counting of levels, you'd find out that it will be highly probable. So that is why I am saying on Euro CHF, I will not be trading a W pattern or this structure that is being presented. I would want to see probably the first move. When they make the first move, that is when I will be sure that the market is already shifting from that particular point and start to look for buy setups. So these are the pairs that I'll be looking at this week, and I hope you will be looking at them as well. On that note, we've come to